from where you sit.
Welcome to another episode of The Trading Bell right here on KTN News. Joining me today is the AIB Capital Chief Executive Officer, Paul Mwai. Now, they have launched this week at the NSE grounds an extremely vital and interesting application that is DigiTrader. What is that all about and how is it going to help you invest and get the most out of your money? Well, Paul is going to tell us more. But before we get into that conversation, take a look at his profile. Paul Mwai is the Chief Executive of AIB Capital and the Chairman of the Kenya Association of Stockbrokers and Investment Banks. He has over 20 years' experience in the financial services industry, including fund management and investment banking. He has worked in various departments within the Barclays Group before joining the Barclays Trust Investment Services Group in 1998 as a fund manager. He served as a senior portfolio manager at Old Mutual Asset Managers following the acquisition of Barclays Trust by Old Mutual in October 2002 and as an asset allocation strategist. He joined AIB Capital in February 2012 from African Alliance Investment Bank, where he was the chief executive of the asset management company. Well, thank you so much, Paul. Glad to have you with us on the show this day. And let's just begin by you telling us, what is DigiTrader all about?
So DigiTrader marks perhaps a very big milestone in the development of the Nairobi Securities Exchange. You will remember the Securities Exchange started off with 5 men sitting around a coffee table exchanging share certificates. Then it moved to the open outcry system. Then it moved to a decentralized system where the system was now connected to the broker's office. We have now revolutionized, and this is the first time where we have a fully automated process where the investor can invest in the stock market without ever having to step into a stockbroker's office. He can do everything online. He can open his account online. He can trade online. He can request for payments online. He can view all his statements and do anything that he would be able to do within the stockbroker's office online. So finally, we have taken the stock market to mashinani. Yes.
So it sounds very exciting.
Yes.
How long did it take you to develop this, app
Yes.
and website? Of course, it's available via the laptop as an app for smartphones and as a USSD code, I believe, for those who are using non-smartphones.
Yes. So it's been a long journey. In 2012, we developed the USSD solution, which we used the code 543#, which enabled people to invest in the stock market. In 2015, we developed an app. We developed the online and the app, which then enabled them to access either through a smartphone or through your laptop or desktop. But we had a big challenge with penetration of these new products. The key challenge was that it was still quite a process for you to open the account. You had to first go fill in a physical form, provide your ID, your passport, a copy of your passport or ID, a bank statement, a photograph, and all those other kind of normal know your client requirements.
So are those all still required now with the app?
Now with the new DigiTrader, that's not required. So that's the innovation and that's the solution. So what you now do is you go onto your mobile phone, you dial the *443# or you go online on the app or on your laptop, and you effectively key in your details. These details are then taken to the National Registry, the IPRS, or the National Registry of Persons. We pull that data from the National Registry. We pull your data from the National Registry of Persons. So we are actually authenticating that it is you we are dealing with from a remote location. We send that data to the Central Depository and Settlement Corporation, which then opens an account and gives you a CDS account number. That CDS account number is then now what you use to activate your trading account. From then on, you can then now fund your account through M-Pesa or through your bank, either online banking, and begin to trade and buy and sell shares on any counter in the stock market.
Wow. So as it's simple for the user, of course, behind the scenes, you are doing the vetting, you are doing the, collaboration from one end to the other. So it's very interesting to see that process. And I believe during your pilot phase, you had people all the way from Bomet, you had people from Marsabit.
Yes.
So what kind of scope do you see this app covering across the country?
I think this is revolutionary. For the first time, we have an account holder in Garissa. We have an account holder in Marsabit. Before that, you could not open an account, and the challenges of even getting them, people from there, to get the forms, fill in the forms, send them back.
Yeah.
We could not. We also were trying to tap into the diaspora market, and the process of completing the account opening procedure. And sometimes investors want to take advantage of an opportunity when it's hot.
Yes.
When they have a good tip on a stock, they want to invest today. Now, if it takes 2, 3, 4 days, 5 days to get the account activated,
it's too late.
It's too late. Maybe they missed out on the opportunity. So this enables them to access the market immediately and be able to trade as soon as possible.
So this can be used anywhere in the world now?
Anywhere in the world, but only for Kenyan citizens, because
Okay.
we are tapping it from the IPRS, which is the National Registry of Kenyans.
Fantastic.
Yes.
That's amazing. So, when we talk about the different groups that you can rope in with this technology, of course, the technology that we are using now is creating so much evolution in a lot of sectors, like this one, for instance. But still, now that it's easier, now that it's available, there is still some sort of skepticism that comes into play with new investors, especially the youth. When you don't have the complete understanding of how the financial circuit works, you're a bit apprehensive. And there have been calls for greater investor education in the country, especially for the youth.
Yes.
So where do you see the greatest challenge in still getting them on board now? Because this has been something talked about for years.
Okay.
So where is the challenge now?
I think the youth today are more for quicker things and what sometimes we refer to as instant gratification, if you would call it that. And in the past, the process has been too long. So I think these kind of innovations are what will bring the youth. The youth are big on smartphones, they're big on internet, they're big on social media. But in the past, the stock market didn't allow that. So while there's a real importance to educate the youth on the importance of investing in the stock market, we also need to provide the platforms that will enable them to do that. Today we have a lot of youth gambling and investing in things that might not necessarily...
Betting, for instance.
Betting,
yeah.
For example. So at least with this new application, they can be able to access the stock market. I mean, we heard from Jeff Odundo that the Shanghai stock market is 99% domestic investors and mainly retail investors. So we need to get that as well in Kenya. And it is the youth of today that will be able to achieve that.
Okay. Another sector of the population that I feel also needs to be tapped into, and we've talked about this previously throughout the years, is the informal sector and their understanding of how this works. So what is the challenge with that now?
Okay. I think there's been a big challenge with investor education and getting people to understand investment from the informal sector. But I think there's a lot being done both by the NSC, the CMA, and ourselves at the Kenya Association of Stockbrokers to educate the public in terms of investment options. I think it's a long journey, but we need to continue and we need to encourage them. But and the importance of innovation is critical in achieving that kind of education.
Okay, and of course, yes, you are the chairman for the Kenya Association of Stockbrokers and the investment banks as well. So what role does the association play in this entire ecosystem?
Okay. The association is an association that brings together all the stockbrokers and investment banks in the country so as to further their common interests. And we have been successful in looking at what challenges we face as a market. For example, for a long time we've had the challenges of not getting new entrants into the stock market. We, together with the NSC and the CMA, have launched the new Ibuka program, which now looks at companies who can come into an incubation process be in the stock market, be visible in the stock market, and declare their intention to list, and then we can then guide them to the listing process. So already we have 3 or 4 companies that have already listed onto the book, a huge pipeline of companies that are coming. So we are solving the problem on the demand side.
Okay.
Just the same way as this application will then now solve the problem on the supply side. When we have those 2 working together, we'll have a vibrant and very efficient market.
So a lot of programs working in tandem to achieve
Absolutely.
these goals.
Absolutely.
And you know, of course, you're in a great position to tell us then your predictions for the Kenyan market for 2019, just as far as what you've observed, how the year has begun. We've seen a lot of companies also releasing their full year reports for 2018 in these past weeks, especially the banks. So what kind of perception have you gained of how the Kenyan market seems to be performing so far this year, especially in comparison to last?
Okay, so I think the stock market has been on a bit of a roller coaster. The beginning of last year, we had it rising significantly. Then it began to decline because of the global markets, global environment towards the end of last year. But I think we're encouraged that this year will be a better year. So far, it is the best performing frontier market in the world today. So we are actually on an up, and we expect that to continue. A bit of concern because we have quite a number of companies that are issuing profit warnings and who are saying that their profits will not match what they had in the previous year. But there are also a lot of good companies who are showing growth in profitability. And if you focus on the good companies, I think this should be a good year. And for example, despite the interest rate caps, we have seen banking profitability continue to grow. We've seen growth in various sectors of the economy. We are also encouraged by the fact that the interest rates are declining in Kenya today. Today we have the T-bill at probably the lowest we've had it in the last 10 years. We are also encouraged that inflation has remained relatively low.
Okay.
But also the outlook in terms of economic growth is quite positive. We have a stable shilling. When you combine the macroeconomic environment, that gives you the right environment for the stock markets to grow and deliver good returns.
Okay, fantastic. And even as we wrap up the conversation, you know, when we talk about people who are going into investment or going into business, we have a lot of young people who want to have something of their own. So like you said, you know, with banks, interest rates are going down, but still with the rate cap, they're a bit more apprehensive to lend to SMEs as opposed to the government and larger corporates. And then you have such programs that allow you to have passive income that can fuel your business, that can fuel your dreams. What would you say are the greatest options that a young Kenyan has right now to fund their businesses, their projects as we speak? Okay.
You know, when you, as a young Kenyan, I think there are various options that you can look at. We need to look at venture capital funds that have come in and are looking to pull in money from investors and looking to invest in startup companies that are looking to grow. I think the Ibuka program is a solution to some of the challenges that interest rate cap bring, because SMEs can now come into the Ibuka program and look to list and raise money from the stock market as opposed to borrowing from banks. So when one tap closes, a new one should open, and people should be able to raise equity capital as opposed to debt capital from the bank. And we would encourage companies to come onto the Ibuka program because then they're able to sell shares and raise equity capital from the stock market.
Organically?
Organically, yes.
Okay, so there are options, and I guess that is some great insight that somebody somewhere out there would be able to use and fuel their dreams. So thank you so much, Paul, for speaking to us today on The Trading Bell.
Thank you.
All right, on that note, we're going to take a look now at the market analysis.
I would say the key themes in banks are non-performing loans. We've got IFRS 9 and the rate cap, obviously. So in terms of non-performing loans, we've seen non-performing loans increase over the period.
Time now for the markets analysis on the Trading Bell. Joining me is Sarah Wanga. She is the Head of Research at AIB Capital. Thank you, Sarah, for making time for us today.
Thank you for having me.
All right, so let's break down some of these numbers. And as we were discussing a few minutes back, a lot of our movers, gainers, losers seem to be banks this week. Equity, KCB, Cooperative, Barclays, and of course, Safaricom is kind of a stagnant feature in the movers, but the rest are banks. So we know a lot of them have been releasing their results, but what is keeping them here and why these specific banks, for instance?
So I would say the key themes in banks are non-performing loans. We've got IFRS 9 and the rate cap, obviously. So in terms of non-performing loans, we've seen non-performing loans increase over the period. In 2017, the average non-performing loans across the banking sector was 10%, but last year, non-performing loans ratio increased to 12%. In terms of the rate cap, what that has had, the impact had on banks is that they have reduced their lending to the private sector.
Yes.
And so the impact on their book is that loan growth has decreased. So we've had interest income growth reducing. And then also in terms of fees and commission, that has also reduced because less loans, so less fees and commission income. So non-interest income growth has also remained low. But most banks have been able to record double-digit growth because of lower costs, so increased efficiencies. So we've had them using more technology, apps like the one for Barclays, new apps, and so that has helped them. And also we've had provisioning reduce. So IFRS 9 came into play last year. And so they have, what the impact of that was that the provisioning did not go through the income statement. Okay. Instead, it went through the balance sheet. And so there was lower provisioning. So overall, for a number of banks, income growth has been in double digit.
Okay,
yes.
So let's take a look at our gainers now. We're seeing I&M Holdings, a change of 15.65%. Any insights into that particular, change?
So I&M released its results recently and it recorded a 17% increase in its EPS, mainly due to the reduced costs, which helped grow the EPS. So that is one of the reasons why it's among the top gainers today.
Okay, so there we have our gainers, and then on the complete opposite end of that spectrum, in the losers, Equity Group is coming in completely at the bottom there with a negative downward turn of 8.10%. So
Equity has historically recorded double-digit growth in its income. So this year, 5%, it announced a 5% increase in EPS, which was unlike Equity. It was a surprise for most investors, and so that's why it's among the top losers. Yes.
Okay, so there's a lot of focus, as we said, on the banks. We've also got Nairobi Business Ventures, though, as one of the gainers. We've got Car in General as one of the losers. So the other ones are simply just the regular movement.
Yes.
Okay. Are we still expecting the banks to be featured heavily in the, exchange gainers, losers for the next coming weeks?
Yes, banks should still attract a lot of attention. As you know, the ones that usually attract attention. So going forward, actually, we'll see 2019 is likely to be a good year for banks. We'll probably see them increase lending to the private sector. We've seen a number of banks seek funding, alternative funding from organizations like the IFC, so Equity, Corp, have gained some funding in that area. And so going forward, we'll see them increase lending, and so that will attract investor interest.
Okay, well, if they increase their lending to the private sector, of course, that would be a big relief for SMEs especially, that have been needing that particular flow to happen. But let's also look at the NSE 20 share index. Not much movement there, just a change of about negative 0.71%. Do you think, we are this week at 2,835.47 as we speak. Do you think hitting that 3,000 mark is something very far? Because we'd reached it and then it suddenly declined again. So how long do you think it might take for us to reach that stability, and what are the factors around that?
So support in January, when it hit that 3,000 mark, came mostly from local investors. And so they're the ones who supported the market, but local investor participation has reduced relatively. And we've seen foreigners slowly come back into the market. So we're seeing foreign net inflows. And so that hopefully will help drive the market to above 3,000.
Okay, so there's a bit of a shift between the local and the foreign investor, interests.
Yes, yeah.
Okay, well, that's it for the market analysis, but let's take a look at Markets 101. Well, it's time now for our question on the street, and we've got Diana tweeting this one in. She's asking, what does it mean when a market is bearish and when it's bullish? And I know a lot of people sometimes do get confused and don't understand, where's the bear and the bull coming in from. So Sarah, why don't you answer that for us?
When the market is bullish, that means people are optimistic about the market and therefore they buy more, so prices rise. When the market is bearish, it's actually the opposite of bullish, is when people are less optimistic about the market and therefore they sell and prices come down. And currently we're sort of in a bearish market.
All right, thank you so much for answering that question. On that note, let's take a look at the NSE historical fact. And that's it for this episode of The Trading Bell. Sarah Wanga, thank you for joining us. Of course, she is the Head of Research at AIB Capital. Once again, we really appreciate you taking your time to be with us.
Thank you.
On that note, of course, I want to remind you that you can keep up to date with us on our social media handles appearing right there on your screen. Until next time, of course, this is Trading Bell. My name is Maalika. Kazia.